Well, we are seeing U.S. Treasury yields pushing a little higher today as investors hope for a dovish pivot and betting the Fed is done with rate hikes after softer economic data this week. So if you're in the market to buy a house, is now the time to strike? For more on this, we have Yahoo Finance's Jennifer Schonberger and Dani Romero. Guys, it's not every day that we have you both in studio, right? But it's interesting because we have been having these separate conversations about where rates are, how that affects sort of the buyer that's in the market. I mean, Jen, let me start with you. I mean, how are you looking at this right now in the context of where the Fed could be in their policy?
Yeah, hey Akiko. So we've certainly seen the yield on the 10-year Treasury back off from the levels that we saw around 5%. Now we're trading around levels last seen after the Fed's FOMC meeting in September. And the major driving factor there is the fact that we're getting data on inflation that is showing continued progress. Now, the question is, will we continue to get that data? We still know that the Fed has another rate hike on the table. Whether they pull that trigger or not remains to be seen. And at the same time, there are other factors that are influencing the Treasury market. We know that the U.S. Treasury is issuing record amounts of Treasuries. We know that the Fed is continuing to roll off its balance sheet with quantitative tightening. So these are all factors that could also contribute upward pressure to the yield on the 10-year. Does it go to 5%? You know, bond traders telling me maybe not, but could it go back up to 4 3/4? Yes. And that's still going to provide a lot of pain, right? Because, Dani, we see home mortgage rates that are influenced by the yield on the 10-year.
Yes, the 30-year fixed mortgage rate does follow the 10-year Treasury yield. And yes, there was some wiggle room towards home buying this week. We saw the 30-year fixed mortgage rate dip down to that 7.4% this week. Is that enough to really fuel people back into the market? That's up for debate. I mean, rates are still above 7%. And if we take a look at what the median down payment is right now, it's about $30,000. And that made up 14.7% of the sales price. So it's still expensive to buy a home right now. And, you know, there's also data that shows that sellers are getting a little bit antsy because of that. And so they're offering incentives, whether that is cash for repairs or mortgage rate buy downs, which they upfront the cost to lower down the rate on a loan. These things are happening. And if the buyer doesn't get the deal that they want, this incentive, they're walking away from the deal completely because it is so expensive. And so there are buyers that are really cautiously about this, budget cautious about home buying right now. So yes, rates are still pretty moving up and down. It's a volatile market still. And like you said, the Fed hasn't pretty much said no to the possibility of another rate hike. They haven't ruled it out. So with that in mind, there is still a lot of uncertainty whether or not the 30-year fixed mortgage rate will even dip down below even 7%.
Well, I mean, to your point, everyone is pointing the finger at the Fed, right? Because you had mortgage rates hitting 8%. But, you know, affordability also comes down to supply on the market, right? And the fact that we have like 80% of Americans who are sitting on fixed rate mortgages of 5% or lower, they're not really looking to sell their homes. So you have that factor at play, which is keeping prices near record levels, contributing to the affordability issue. I had Meredith Whitney on just last week on Yahoo Finance's Invest. She made the case that baby boomers are going to need to downsize, and that is going to bring supply back onto the market, and maybe we'll see some balancing out there. Her prediction is later next year. What do you think?
Well, I will say to the baby boomers, just one quick note on that is that Barclays actually argues that baby boomers, they're such a big population, but compared to the younger population, there is some leverage for the younger population to squeeze in there to get into a home. The fact that the baby boomers that generation will soon, obviously, some life circumstances will happen. We'll move on to the next generation, and that will be millennials. But I think Rochelle wants to dive in a little bit here.
Yeah, because Jennifer, I wanted to direct this to you because I know when we look at where interest rates are now, if you give us some context as to where we were, we've had historically low interest rates for a very long time here. So are we getting to a sense of a new normal here? I know it sounds bad. It's one of those things where people are like, I shouldn't have to just suck it up. These are incredibly tough times when people are trying to get into the housing market. But give us some context here as to where rates are.
Yeah, Rochelle, how many times have I heard my parents tell me, well, we had to buy houses when mortgage rates were like, 20%. Like, you guys, 8%, that's still low. But, given where we are with prices, that compounds it. But to your point, yeah, I mean, I think we're in a new era of higher rates. We are not going back to 3% mortgage rates or lower. That was a product of a crisis, of the pandemic. And unless we have a major shock to this economy, I don't see that happening. So we're probably going to be staying in this 4 to 5% range for some time to come, unless, like I said, there's some black swan event.
Well, we could talk about
4 to
this.
5% though. 4 to 5% though, Jen. I mean, that if you're talking about like mortgage rates, I mean that's welcome news, right? We're talking about 7.5%.
Right, that's what I'm saying.
So
Yeah.
I mean, I will tell you, as somebody who's in the market for a house, I'll take it.
Right,
4.5 to 5%.
Well,
I will take that.
Well, I'm saying 4 to 5% on the 10-year Treasury,
Yes,
which is
no,
going to
yes.
influence
No,
mortgage
I
rates.
understand.
So that'll keep your mortgage rates higher there at Kiko, but yeah.
Yeah, and to Dani's point, I mean, at the end of the day, it is about inventory. So many factors that shape all that. But great to have both of you on, Jen Schonberger and Dani Romero, joining us on that conversation.